Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me for the segment, Kline is back with us, co-founder and COO of Bitcoin IRA, to discuss why you should consider buying crypto in your IRA account. Chris, it is great to see you again. Welcome back to Trade Talks.
Thanks for having me back, Jill. It's a pleasure to be here today.
And let's start with the very basics here. Why buy and invest in crypto right now?
Well, modern day investors are moving and making smart money decisions because the world has changed. It's pretty bottom line. You watch how Tesla has disrupted the auto industry. Amazon has disrupted retail. Cryptocurrency is also disrupting alternative investing, and modern day investors are looking at it as a piece of their overall pie.
Who are some of these modern day investors that are investing in crypto?
It's interesting. It's a very broad spectrum compared to some other asset classes, kind of have an archetype. Early on, there were the FANGs, as I call them, the engine nerds. We had NASA scientists, IBM engineers. As it has progressed, it's a lot of just average daily folks. In fact, 75% of our user base was born before 1976. So it's not the misnomer of being a young investor's game anymore.
Yeah, just made the cutoff there. that was good to hear on a Friday. And one thing we've been talking a lot about in 2022 is inflation and how it really is impacting us, from the gas pump to groceries to rent. Does Bitcoin and crypto in general serve as a hedge for inflation? Why or why not?
Yes and no. I know that's a terrible answer, but truthfully, the way that inflation is hitting us is, and it's not going to be transitory, and it's coming down on all spectrums, not just at the fuel pump, but like you said, rents otherwise. What Bitcoin does is it's finite. So part of the reason we have such bad inflation is since 2008, we've 10x'd the size of the balance sheet for the Federal Reserve, meaning we've added 10 times more money into the system. That makes things more expensive. Counter to that, Bitcoin is a finite asset. There will only ever be 21 million Bitcoin mined ever. And so being so finite, like gold or real estate, gives it that characteristic of a hedge against inflation. Now, it's got volatility. It swings up and down. It has some correlation with stocks right now. So those are characteristics that make it seem like it may not be a good hedge against inflation. But long term, most folks believe that it will be.
Let's discuss decentralized finance, or what's known as DeFi, which is really at the center of innovation that we're seeing in the financial services industry. What was it created for, and how is it being used?
Well, it was created for transparency, immutability. Like, this distributed ledger of transactions has never existed before, right? It's always been behind the scenes. The bank holds its transactions, and there's certain things that are public record, certain things that aren't. What we see now with DeFi is it's distributed. Everybody can have access to the same ledger of transactions, which allows it not to be manipulated. It's immutable, so everybody's able to see what's happening. It really brings that transparency to financial institutions that we love to have.
And why do you recommend crypto in an IRA account? Traditionally, we think of mutual funds and stocks and bonds, those kinds of asset classes. What makes it attractive for an IRA account?
Well, it's attractive for an IRA because of the tax shelter component. So especially for folks that got in early, that bought Bitcoin at, say, $5,000 a coin, that growth up to now $45,000 and beyond is all in a tax shelter vehicle, whether it's a Roth, it's tax-free growth, or it's tax-deferred growth with a traditional type of account. So that's a big reason why folks look at it. Also, cryptocurrency, given its short-term aberrations and its short-term volatility, a lot of folks are just, when in doubt, zoom out. I'm buying and I'm holding for 3-5 years. And what a great vehicle to do that in is my retirement.
Right. And of course, let's talk about that. We know it's a volatile asset class. It's still very, very young in the grand scheme of things. What are some of the associated risks you should be aware of once you start to participate with crypto?
Once you get into crypto, the biggest thing is security, security, security. We hear all these horror stories of, I lost my seed, I can't find my ledger, I got hacked on my Coinbase account. All these things happen, and we have to be much more secure when we're handling crypto. It's not like your bank account where you can call up American Express or Wells Fargo and say, hey, somebody stole my debit card, I need help. If you have to keep your seeds and your passwords very secure, multi-factor authentication is paramount. You need to have those in place, and make sure that you're doing business with reputable platforms. At this point, crypto is about 13 years old, or will be later this year. It's grown up to a point where there's platforms that have put security first. So that's a big first place, is that once you get into it, make sure that you're thinking about securing the asset.
All right, Chris, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.